Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, I want to go over all the trades that we made for Monday, March 9th. So kicking off the new week, had a couple adjustment trades that we actually talked about and kind of went over really with premium members on the strategy call last night on Sunday night, and then also closing trade in Microsoft. So let's actually cover the closing trade in Microsoft real quick. We originally had an Iron Condor in Microsoft and have been trying to close this thing out for about a week now, and decided just to go ahead and buy back the two short strikes that we had that built this Iron Condor. So we had the short 46 call and the short 39 put. We bought those back, so we still have the long options, which are basically worthless right now. It's not worth going ahead and selling them back to the market. You can't really get anything for them. So we are holding two long call option and a long put in Microsoft. I don't see that there's any way that those could possibly make any money between now and expiration. So we're factoring this $36 profit, assuming that those do expire worthless because they're already worth no money right now. So Microsoft ended up being a really good trade. When we look at the chart here, the reason Microsoft was a great trade is because we sold it when implied volatility was high. So we sold it back around this time period. Implied volatility went lower, which was great. And the stock more or less has traded sideways since then. It's gone through definitely some whipsaws. And if you held on to it, and again, just kind of waited and let the probabilities work themselves out, you can see that at one point we had a losing trade to the bottom side. At another point, we had a losing trade to the top side. So we were tested on both sides of this Iron Condor, but the stock kind of settled right in between that range today. And so that allowed us to go ahead and take this thing off for a nice little profit. All right, so two adjusting trades that we made today. The first is in SPY. So this SPY trade, again, we went over this with premium members on the strategy call on Sunday night. We decided to add a credit put spread below the market just to help increase the total credit that we received on the entire Iron Condor looking trade that we have right now. But it also helps reduce our total risk and widen out our break-even points. So as the market has rallied a little bit higher, we have seen a slight uptick in volatility, which has helped, but really what we're trying to do is just basically hedge ourselves in case the market does move higher between now and March expiration. And when we go inside of the Analyze tab here in Thinkorswim, this is the current position that we have, and I just want to take off the adjustment that we made today. All right, so this is the position that we have right now, kind of pre-adjustment. You can see it's this really weird, unbalanced Iron Condor. It's got a lot of tiers because we've already made an adjustment one time in this strategy. But as the market's trading right here at about 208.19, we're really still tested to this side of the trade. So if the market continues to rally higher, then this side is the side that ends up losing first. And right now we could lose about $100 on this trade if we did nothing. What we decided to do was add this put spread below the market. And so now that we're getting closer to time, we've kind of narrowed down our potential profit window to right inside here. And that's still within a pretty good range of where the market could possibly fall in the next 15, 13 days. And you can see that's also reduced our risk just a little bit to about $60. So now we only potentially lose $60 if the market does continue to move higher between now and expiration, assuming it doesn't go really past about 215 or so, which is a pretty good jump. And again, if it does happen to fall down below where our strikes are right now, we only lose about $60 down in that direction as well. So risk reward wise, I really like this trade heading into expiration. We could potentially make about $350, and right now we've got about $60 of risk. So I think we've done a pretty good job in making these adjustments, but as always, the name of the game with making adjustments to any strategy is widen out your break-even points and reduce risk when possible. All right, so we also did that in EEM, and basically what we did in EEM is sold the 40 calls for a 20-cent credit. Now, we actually owned the 40 calls already, so basically we sold out of and closed one of our 40 calls and took in a 20-cent credit. Now, that made us basically have a ratio spread in EEM, and this additional 20-cent credit that we received, again, just reduces our potential loss. And again, it's not factored in here because right here on the actual Thinkorswim chart, it assumes that this position is making money, but it doesn't factor in that we already sold the other call for a little bit of a loss. So it did reduce our loss another $20 or so, and you can see now we have a ratio spread. We are carrying that extra margin above the market, but it's only for about 13 days or so, so it's not too much margin. We're not carrying it too long. And what I like about this adjustment is that not only did it reduce risk, but if the stock does turn around and starts moving higher, it's first got to go through this area where we could end up taking a profit before it gets to the area that we could potentially take a loss, or our naked end of the trade. So a lot of people talk about the fact that they don't like to trade naked options. I think that once you understand the risk, and particularly in this situation, the market's got to move through an area where we could potentially close the trade for a profit. So unless we do nothing and we just don't watch it, and it goes right through that area and kind of skips over that area, we have an opportunity, if the market turns around against us, to actually close this trade at a profit before it even gets close to going somewhere down here where it could potentially end up creating a bigger loss because we're naked on that side of the trade. So you just have to understand how these things work. And again, use the Analyze tab or the risk profile in your broker platform to kind of simulate these trades before you actually place them. So that's it for tonight. Just a couple quick trades. As always, if you guys have any questions or comments, please add them right below the video, and happy trading.